Hello everyone, welcome to the Ichimoku charts.com and forextrading.tv daily analysis for the S&P 500 for Thursday, November 7th, 2013. Well, a very large black body candle today, and a candle that's closed down towards the lows, opened up towards the highs and closed towards the lows, suggesting that the sellers have taken very strong control of this market at the close of trading, and that the sellers have been very strongly committed to trading this market lower. Early in trading activity, we did see the market test above the previous high and suggested there was a possibility of the trend continuing to the upside. Crucial to this continuation of the trend to the upside and the test above 1775, the important major high, would have been the market closing up above those levels. And we see now for the second consecutive trading day and from the recent past that the market has had trouble closing above the 1770 level, and today tested above there and very strongly rejected from there. There was some rejection from the previous day's trading and a hint that all was perhaps not well with the trend, but today confirmation of that. Now the sellers have been that strong that they took out the support or potential support at the 1760 level, which was a previous minor swing high, and then down around the 1750 level where we saw the market find support in the recent past. We also took out the area down around 1750, so there is a very good possibility that we could see this market trading lower, perhaps down to the previous swing low around 1740, and then down below there we may have the window that was opened around 1735 level coming into play. That window has been active for quite some time and really should hold up as very strong support for this market if the market does trade through 1740. The question here is, however, with this very large black body candle, have the sellers done too much too quick? And very often we see it when we have an extreme trading day such as today. We see the side that was in control take a rest. We don't automatically see the opposite side, the buyers in this case, take back control of the market, but what we see is the sellers lose some commitment because they've just done too much work. We see some profit taking could see the market trade back up to around the 1760 level and find resistance there if the buyers do come back in. But really the story here is about the sellers and the strength, and the question is, will they continue the trend to the downside? Now technically we actually haven't had a change of trend yet, because here we have an outside day in bar chart terms, and this is actually a bearish engulfing pattern of the one candle uptrend that we saw for the previous day's trading. So we are looking for a lower high and lower low here. So we technically can't use the Fibonacci retracement tool from the or the Fibonacci extension tool from the high around the 1774 area, but just looking at what it gave us for the previous day's trading, and did give us a hint with the rejection from above the 100% level, and the failure to close above there did give us a hint that the trend to the upside was not as healthy as we may have thought. In terms of Ichimoku, obviously a bullish market in the long-term time frame by trading up above the cloud, and if you recall, for some time as we were trading up around this area and within this congestion type area, there was a very strong suggestion that all was not healthy with the trend, because we were looking overextended. We were trading a fair way away from the cloud, and now over the past 3 or 4 trading days, as the market continued on, the cloud actually moved lower and further away from price action, therefore extending that rubber band that the market tends to be on and extending it away from the cloud, and the cloud tends to act as that equilibrium of the rubber band, and the market will bounce back towards that equilibrium in the longer term time frame, and the equilibrium in the longer term time frame is denoted by the cloud. Also in the medium term time frame we are trading above the Q10, so still bullish in that medium term time frame. That's the pink line here, but it has been pointing flat for some time, and as I've mentioned many times, when the Kijun-sen turns flat, price action tends to be attracted back towards it. So that's what we're actually seeing at the moment, and it does suggest a very real possibility of this market continuing to the downside, but perhaps finding support at those levels that have already been mentioned. The very strongly bearish breakout and close down below the Tenkan-sen does herald something of a change in sentiment in the short-term time frame, where we've been trading above the Tenkan-sen for quite some time. That's the green line here, and we had the bullish breakout here. We saw the Tenkan-sen holding as support for this market, and now a change of sentiment with this bearish activity down below there. This does suggest that that change in sentiment may lead to the market trading lower. So I suggest that this 1740 level is a short-term objective for this market, and if we do see the sellers relax, we certainly still could see the market test down to that area and then see the buyers come in, or even down to the window. Just down below the window we also have the 1729 level, roughly 1730, a previous major swing high, and that area there and the window just above should offer themselves as very, very strong support and may limit any severe sell-off that we see in this market. So really we are looking for a potential lower high and lower low to confirm the downtrend that the sellers are certainly hinting at in this market, but we are looking for potentially strong support just down below where the market's trading.